Good morning. We have to start off the week with a very, very quick view at the monthly chart. As you can see, we double based, we went to the head and shoulder pattern, we broke higher, we haven't reached the target area really that this head and shoulders should have produced, but we did reach the 61.8 of that whole move down, and that was in 2000, as you can see there, in 2014. We based in 2016, and this has been the story ever since. So that's the brief view of the monthly. You can see that we are holding below the monthly pivot, and that will continue. That pivot level will be there until the end of the month. But let's take a view now at the weekly. Now on the weekly, you can see where the market overextended and broke through that 76.50 area, but we didn't really go any further. We tried for 77, our high was 76.90, and down we came. Now at the moment, you can see, if I squash this out a bit, you can see that we're really being held by the trend line on the weekly chart and this 23.6, which is at 68.5. Now we have bounced a little bit from there. You've got your weekly short-term moving average coming in at 69.67, and we're below that at the moment. The 21-day is coming in at 70.53. So there's your upside resistance. Our weekly pivot is coming in at 70.09. So I think this value area up here, which is around about the 71.5 area, is going to be the maximum I believe that oil can go this week. Now, I could be totally wrong, it's oil, but it is that 71.28 area and that 61.8 rejection on the monthly chart really has put a lid, I think, on oil. You can see that that week, although it made that new high, it didn't sustain it, and the next few weeks we've seen obviously the market trade quite a bit lower. So what happens if we break below this 68.5? Well, we do have support for this market around 66.80. You've got it again at 68.37. You've got it again around about 64.43. So you have, I mean, that's an outside week really. This other trend line that's coming in is coming in around 67.13. So unlucky for some probably, but if this doesn't break above that moving average coming in at 70.5, if this week we can't break it, then unfortunately oil will trade lower. We're actually at the zero line for the weekly trend, so our trend could be in trouble, you know, and this is only going from the beginning of the year. Markets love, I don't know why, but they do love to try and test the yearly high and or low. And if you look at where we opened around January this year, you can see that we opened around about the 54 area. Okay, so our first week in January, the yearly opening price was 54.20 with a high of 55.24 and the low of 52.11. Now, I'm not saying by the end of the year oil is going to go back to these giddy areas of support. But what we are seeing is, although we're in an uptrend on the weekly charts, you can see quite clearly that on the monthly it struggled and it rejected it very, very quickly. Now, market's in uptrend, so let's just take this year, okay, from where we based in June. We know that oil loves to go higher in the summer months, and that's sort of understandable really. But what we have been seeing is, although we've been getting higher highs and we are staying within the uptrend is looking under pressure with the technical indicators for the week. So there is a good probability that by the end of the year we're going to come down and test this 55-day moving average at 64.95, and you've got this here, the 38.2 coming in at 63.49. Now, I took this from the low over here of June. You could go back and take it from the 2016 lows, but I didn't do that. I took it from just this year just to see how far we went higher. Now, we've tried the highs, we've rejected it, we are poised to trade lower. But let's just look at the daily chart and see whether or not we can finesse it down to what we can do intraday. Now, as we are seeing, oil trades in steps. So every pattern on this key reversal day, everything we've seen so far has been negative. So when it came down to the 23.6, it double topped. When it came down to the 38.2, it couldn't really break above our moving averages. It should have held at the 50%. It didn't. It kept going. And we're at the 61.8%, which is 69.21. We're trading around 69.40, 69.60 at the moment. We're still currently below the 55-day moving average, which is coming in at 69.96. This is important. It really is, because if we can't break above here, we're going to come down to the 200-day moving average that really is intersecting with our 78.6, which is 69.11. And even if you don't believe in Fibonacci, you can look at the low over here, which is 66.86 and at 6,700. So there's a lot of reasons why this support is going to be the focus and the aim for. Yes, we are extremely oversold on the daily charts, but we can go sideways from that if we can stay above this 69.15 area this week and just oscillate between those two fibs. We can actually correct the oversold conditions and see the market stochastics move up above the 70% line, the 20% line. And as I said, we could try for this 55-day moving average at 69, 69, 96. This would be a better one to go for, which is that 70, 70. There's a lot of resistance up here, and that, if we moved up to here, would ease these oversold conditions and then let oil find its natural level, which I think before the end of the year is going to be down here. Thanks very much for listening, and I'll catch you tomorrow.